All right, so let's start off with this whole Colombia tariff thing. I think Megan kind of spelled it out. It wasn't supposed to be a revenue generator. It was more of a weapon for a political fight. How do you view that when it comes to some of these tariff proposals, when it comes to Canada, Mexico, et cetera?
I think it's a bit of a sign of relief for the markets. You know, the president has said he's going to add a third storyline or usage for tariffs, and this was the one we saw. It's geopolitical in nature, moving geopolitical needles, not for revenue raising, not to balance trade imbalances, which is what we've typically seen tariffs used for in the past. And now we're seeing it used purely in a geopolitical way. This really had, as Megan did a great job highlighting, really didn't have a lot of macroeconomic impact on the economy, but it really moved the needle with something else, which was the prisoner exchanges and the deportation efforts. And we're going to see this as a huge win. And I think the markets will like it, Frank. The markets will like the fact that these are strategic in nature, not for economic reasons, not for macroeconomic reasons, but for other policies, geopolitical related policies, so that the risk of a universal tariff or something much more aggressive on the macroeconomic side might have gone down a little bit. And I think the markets will like that.
All right, so you think the markets like this whole, what we're calling a tariff spat. What the markets don't seem to like is this development of DeepSeek out of China, an open source AI model. So we do have to go back last week, the president signing an executive order around AI that some people thought were concerning. Some of the parameters of it were concerning when it came to national security. Has this whole view about AI in this administration, does DeepSeek change this in any way, whether we're talking Project Stargate, that executive order, or the idea that these tech giants are going to be working hand in hand with this administration?
Frank, I think you got to step back and think about innovation. The way innovation works, it disrupts, and we rotate into new innovations all the time. Sometimes it happens quickly, sometimes it happens slowly. But the real underlying positive, even though everybody's looking at red on their screens and seeing 2, 3, 4% in some of the aggregates, is that we're going to open up AI or whatever innovation we're talking about on a day to the masses at a much lower price. And the key word is lower price. This is disinflationary. This is going to open up the Fed discussion. This is going to open up, why are rates here? Why do we need restrictive policy if we've got huge positive supply shocks? This is a positive supply shock driving innovation and prices and input costs lower. The market will seize on that. As you pointed out earlier, bond yields are down 10 basis points. That's a relief. That's a positive for the market. You're going to see things like the real estate sector and other sectors like that. But more importantly, this is going to open, if it works, and we are all novices here. I'm certainly a novice here, but I just look at it in the context of innovation over any sector at any time. This is all quite disinflationary and a positive growth story. It makes the cost of doing business in AI go down. There's going to be losers in that, but the overall market wins.
All right, so you mentioned another topic I want to talk to you about, the Federal Reserve. The president at the World Economic Forum, speaking remotely, said that he wants to see interest rates lower. And he believes afterwards, he actually spoke at the White House, that he knows more about interest rates than Jay Powell himself. We just talked about it both kind of back and forth. Bond yields, they have not spiked. We haven't seen bond vigilantes respond to any proposals or the idea of any kind of disruption. In your mind, when we look ahead to the Fed meeting and the decision later this week, have the consequences, have they changed after what the president said? Do we read what Jay Powell has to say in a different way following what the president said?
Well, I think, look, this is a new way of communicating, a president that operates in a completely different way than any president we've really been watching, certainly vis-a-vis the Fed in our careers. It's always been taboo for presidents or executive branch officials to push an interest rate view, but this president is unconventional, and we're seeing that in every way, shape, and form. And it shouldn't be surprising that he's going to weigh in with a view on interest rates. In fact, he said, I would like to do this. He didn't say I want to sit on the committee, but he wants to say this is my view. And I think if Jay Powell were really calculating this correctly, he's got a year left, he would sort of embrace it and just go, you know what? We'll take everybody's view. Everybody with a talented history in understanding the interest rate impact on the economy. We welcome the discussion with the president and his team on interest rates and monetary policy more generally. Why pick a fight? I think Picking a fight now doesn't make a ton of sense. I understood why he did it in 2018. He was building his legacy. Jay has a wonderful legacy of having, fought back against the great COVID inflation and largely won it. He's got to ride this out for another year, and he could just go ahead and say, you know what, we're gonna sort of look at everything that all of the officials in the Trump administration, including the president himself, say about interest rates. They're talented folks with views that we would like to understand and discuss, and move forward from there.